Welcome, everyone. In today's discussion, we're going to take a detailed look at Applied Digital Corporation and the recent movements in its stock price, along with the company's financial performance, analyst expectations, technical indicators, and the broader market forces influencing its valuation. Applied Digital Corporation, often recognized by its ticker symbol APLD, has recently attracted attention from investors and market observers due to significant price movements and strong revenue growth tied to the rapid expansion of high-performance computing infrastructure. Before we begin, it's important to remember that past market performance is not a reliable indicator of future results, and all information shared here is intended purely for educational and informational purposes rather than financial advice. The information presented in this content is for educational and informational purposes only and should not be considered financial, investment, or trading advice. It is not a financial advice. The stock market involves significant risk, and prices can fluctuate rapidly due to various market conditions, economic factors, and company developments. Any opinions, analysis, or projections mentioned are based on publicly available information and are not guarantees of future performance. Past performance is not a reliable indicator of future results. As of January 15, 2026, during intraday trading around UTC, Applied Digital Corporation's stock price was trading near $35.41. During the same trading session, the stock moved within a range of approximately $34.90 to $36.87, indicating moderate volatility throughout the day. Such movement reflects continued investor interest and active trading activity surrounding the company, especially as the market reacts to recently released financial results. These results relate to the company's fiscal second quarter of 2026, which showed a remarkable increase in revenue compared with the previous year. Reported quarterly revenue of approximately $126.6 million, representing a dramatic year-over-year growth rate of about 250%. This growth has largely been driven by the company's high-performance computing hosting services, as well as tenant fit-out revenue generated at its Polaris Forge data center facilities. The company's rapid growth has placed it firmly within the expanding ecosystem of artificial intelligence infrastructure and advanced computing services. High-performance computing, commonly referred to as HPC, plays a critical role in modern technology development, especially in areas such as machine learning, large-scale data processing, and complex simulations. Applied Digital has been investing heavily in infrastructure capable of supporting these demanding workloads. By expanding data center capacity and partnering with major technology clients, the company aims to position itself as a key provider of specialized computing infrastructure. However, even as revenue growth has accelerated, the company continues to operate with ongoing net losses, which remains an important factor investors monitor closely. Different analysts and brokerage firms have offered varying outlooks regarding Applied Digital's future share price. These predictions represent independent third-party assessments and should be viewed strictly as informational perspectives rather than guarantees of future performance. One of the firms providing analysis is Needham Company, which has reaffirmed its buy rating for Applied Digital shares while setting a price target of $41. According to the firm's analysis, the company's strong year-over-year revenue expansion and the momentum in its high-performance computing hosting operations contribute to a potentially favorable outlook. Needham suggests that as Applied Digital continues scaling its infrastructure capacity, the company could benefit from increasing demand for AI-related computing resources. At the same time, the firm acknowledges that the company still reports operating losses and operates with relatively high operating leverage, meaning its financial results may fluctuate significantly depending on utilization rates and cost management. Another brokerage firm, Lake Street, has also reiterated a positive stance toward Applied Digital shares. The firm maintained a buy rating with a price target of approximately $45. In its commentary, Lake Street highlighted the company's ability to build hyperscale data center facilities and its growing pipeline of contracted revenue. Hyperscale infrastructure refers to large data center environments designed to handle enormous volumes of computing workloads, often for cloud platforms and major technology enterprises. The firm's outlook reflects confidence that Applied Digital may continue expanding its presence within this sector, particularly if the company successfully secures additional long-term customer agreements. Nevertheless, Lake Street's assessment also recognizes that competition within the data center industry remains intense, and future performance may depend heavily on customer spending trends and broader technology sector investment cycles. Meanwhile, B. Riley Securities has adjusted its forecast for Applied Digital's stock price, increasing its target to $53 from a previous estimate of $47, while maintaining a buy rating. The upward revision was linked to expectations that the company could secure additional agreements with hyperscale clients, as well as progress in bringing major infrastructure facilities into operation. Analysts from the firm specifically pointed to key projects such as the PF1 and PF2 facilities as potential drivers of future growth if construction timelines and operational milestones are achieved as expected. However, even this optimistic outlook includes acknowledgement of risks related to project execution, funding requirements, and timing uncertainties that are often associated with large-scale infrastructure development. When comparing these different analyst views collectively, Applied Digital's projected valuation range currently falls between the mid-$30 and the low $50, according to several third-party forecasts. These predictions are primarily tied to expectations surrounding the company's backlog of contracted projects, demand from hyperscale technology clients, and the overall expansion of high-performance computing infrastructure. At the same time, analysts also emphasize risks such as funding needs, execution challenges, and broader market volatility that could influence the company's share price trajectory in the future. From a technical analysis perspective, Applied Digital stock has been trading above a rising cluster of simple moving averages. Around mid-January 2026, the 20-day, 50-day, 100-day, and 200-day moving averages were positioned roughly near $29, $28, $27, and $18 respectively. When shorter-term moving averages remain above longer-term ones, analysts often interpret this as a sign that upward momentum has been developing over time. Additionally, the 20-day moving average remains above the 50-day average, reinforcing the idea that the stock's trend has been positive over recent months. Momentum indicators provide additional context for the stock's recent behavior. The Relative Strength Index, or RSI, was reported near 62.25 on a 14-day basis. This level places the indicator within the upper portion of the neutral range, suggesting that buying momentum has been present but not necessarily extreme. Meanwhile, the Average Directional Index, or ADX, stood near 23.97, which indicates a developing trend, though not yet an especially strong one. When the ADX rises above certain thresholds, analysts interpret it as evidence that a trend is becoming more established. In this case, the reading suggests that the market may still be determining the strength and sustainability of the current movement. Additional technical indicators also provide insight into the stock's short-term conditions. The price has been holding above the Ichimoku baseline around 30.72 and above the 20-day volume-weighted moving average near 30.69, both of which can serve as support levels in certain technical frameworks. However, the short-term Hull moving average near 38.03 has recently tilted lower, hinting at a possible slowdown in upward momentum. Oscillators, such as the Commodity Channel Index, or CCI, have reached levels around 4, while the 10-day momentum indicator has been reported near 10.76. These readings can sometimes indicate that a stock may be temporarily overextended after a rapid move higher, though they do not necessarily signal an immediate reversal. Looking at potential price levels, technical analysts often refer to pivot points and support resistance zones to identify areas where price reactions may occur. On the upside, one nearby resistance level appears around the R1 pivot near 32.28. If the stock maintains a strong daily close above that level, further resistance around R2 near 40.03 could become relevant. On the downside, the main pivot around 2710 may serve as an initial support zone. Below that, the 100-day simple moving average around 2660 represents another potentially important technical level that traders sometimes monitor. If the price were to fall below that region, analysts might look toward the next major support reference around S1 near 1935. As with all technical analysis, these levels represent interpretive tools rather than precise predictions, and market behavior can shift quickly depending on news events and investor sentiment. The company's share price history over the past 2 years reveals just how dramatic its transformation has been. In early 2024, Applied Digital shares were trading at single-digit levels. On January 17, 2024, the stock closed around $5.18, and only a few months later, on April 18, 2024, it reached a low point near $2.44. During much of mid-2024, the stock traded within a relatively narrow range between approximately $3 and $7. At that stage, the company was still developing its infrastructure strategy and gradually building investor confidence. However, momentum began to accelerate significantly during 2025. By the end of May 2025, the stock had climbed to around 6.82 cents. Soon after, the price moved decisively into double-digit territory, closing near $12.52 on June 12, 2025. Over the following months, the stock continued trending upward through the summer and experienced another surge during the autumn period. For example, the price rose from roughly $19.36 on September 15th to about $34.68 by October 31st. Such a rapid increase highlighted growing enthusiasm among investors regarding the company's expansion into high-performance computing and artificial intelligence infrastructure. Toward the end of 2025, the stock experienced renewed volatility, which is not unusual after a strong rally. On December 26, 2025, the price pulled back to approximately $24.19 before rebounding again at the start of the new year. By January 2, 2026, the stock had climbed to around $28.22, and by January 12th, it reached approximately $30.88. After this surge, the price eased slightly to about $35.49 by January 15, 2026. These fluctuations illustrate how rapidly investor sentiment can shift in sectors tied to emerging technologies and infrastructure expansion. Applied Digital's business model sits at the intersection of several powerful market trends. One of the most important drivers is the increasing demand for artificial intelligence computing power. AI models require enormous processing capacity, particularly when training large neural networks. This demand has led to massive investment in specialized data centers capable of supporting GPUs and other high-performance hardware. Companies that can provide such infrastructure may benefit from long-term contracts with technology firms seeking reliable computing resources. Another factor influencing Applied Digital's prospects involves partnerships with hyperscale cloud providers and infrastructure investors. Hyperscale companies often prefer to work with partners capable of delivering large-scale facilities quickly and efficiently. If Applied Digital successfully expands its data center footprint and secures additional agreements with major clients, this could contribute to sustained revenue growth over time. However, these opportunities also come with significant financial requirements. Building advanced data centers requires large capital expenditures, long construction timelines, and careful coordination with energy providers and technology partners. Despite strong revenue growth, the company continues to report net losses, including a net loss attributable to common shareholders of approximately $31.2 million in its fiscal second quarter of 2026. For investors and traders, this combination of rapid top-line growth and ongoing profitability challenges creates a complex investment narrative. Positive developments such as new contracts, improved facility utilization, or favorable industry trends could push the stock price higher. Conversely, delays in construction projects, weaker demand for computing services, or funding challenges could lead to sharp downward reactions in the market. Broader economic conditions also play a role in determining how companies like Applied Digital are valued. Higher interest rates, for example, can make capital-intensive projects more expensive to finance. Economic slowdowns may also reduce corporate technology spending, which could affect demand for data center capacity. On the other hand, continued global investment in artificial intelligence and digital infrastructure could provide strong tailwinds for companies operating within this sector. Applied Digital Corporation has experienced an extraordinary transformation over the past 2 years, moving from a relatively small technology infrastructure company to a rapidly expanding participant in the high-performance computing ecosystem. Its recent financial results demonstrate substantial revenue growth, driven largely by the expansion of data center operations and services related to AI and advanced computing workloads. Analyst opinions vary, with price targets ranging from the mid-$30 to the low $50, depending on assumptions about future growth, customer demand, and infrastructure execution. Technical indicators currently show a developing upward trend, though some signals suggest the stock may be temporarily extended after recent gains. As always, investors should approach market information carefully, conduct their own research, and consider their individual financial circumstances before making any investment decisions. Stock prices can move quickly, and the technology sector in particular can experience significant volatility as innovation, competition, and economic conditions evolve. Thank you for watching and being part of this discussion. If you found this breakdown helpful and informative, don't forget to like the video, share it with others who follow the stock market, and subscribe to the channel for more updates on technology companies, market trends, and financial analysis.